Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials up 15, NASDAQ up 17, S&P's up 5, gold contract up $10, trading at $1,209 an ounce. Silver flat at $16.38 an ounce. Platinum up $9 at $1,225 an ounce. Copper off 2 pennies at $2.88 a pound. Light sweet crude up 44 cents at $67.32 a barrel. Bonds, you have the 10-year down 2 ticks, 126.09, 30 up 7 at 141.09, and King Dollar, check this out, folks. King Dollar is up 324 ticks, 89.25. That has been trying to test on the continuous contract 88.88 for a full month. Bottom line is up at those levels right now. We'll bisect and dissect as soon as we do the euro and the yen. Euro down 72 ticks at 123.11. Yen up 57 at 119.78. Phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You're up 530. You're at 2071, and the high that was generated last Friday is at 2075. We've hit 72. Bottom line, more likely you're going to see that baby get hit. Dow Industrials, we take a look at the Dow. Dow Industrials have got to another high. We have hit 17,905 today. The high of yesterday was 897. Right now you're laying out there at 896. Now inside the Dow Industrials, which is moving it higher, is you have Caterpillar. Caterpillar is up $1.44. GE is up 36 cents. United Technologies 143. United Healthcare 163. Taking points away from the Dow, even though it's up, you have Walmart down $1.12, American Express is off $1.69, Coca-Cola 66, and Procter & Gamble 124. We go take a look at the NASDAQ Composite. NASDAQ Composite up $18. NASDAQ Composite is trading out at 4774, and the high of the downdraft, as we came down on Tuesday was 4782. We haven't hit that yet. We'll see whether we can get up to that level. If we go back to the S&P just for a second, we'll use the SPY as your correlation. The SPY today is doing 46 million shares, and you're going into 103 million shares as well as 142 million shares. Juice is not there. The NDX 100, you take a look at the 3 Qs. The Qs out here today are doing 21 million shares versus the 35 million. Gold contract. So let's go over to gold. Now this is going to be a trip, folks. So not that gold is up a huge amount today, okay? But what you do have is this. Gold contract out here, we are up $9.70. You have 130,000 contracts traded. That is with on Monday. That's when gold rejected lower price, went topside, took out a swing point with volume. Monster volume, 342,000 contracts. Bottom line, gold is building cars right here to get up into the 256. I expect what you're going to see here is actually 341. That's the way it's set up. The thing that's so bizarre, folks, is this. I'm going to go right from gold to the dollar. So we go over to the dollar, and the correlation, no doubt, between the dollar and gold is direct. DXH5. So, what do we... Dollar index today, up some good numbers, 314 ticks. You're doing 7,700 contracts, which is decent for the dollar index. We take a look at this and we put this on a continuous contract, and what you have on a continuous contract, we've hit 89.06. Okay, so we bring this back. Now, this is what gold has been, the dollar has been trying to do, and we've been on this run in the dollar. The dollar has gone higher. This is the 7th month. The dollar came off the low in May 30th. Dollar was trading at 78. Now you're at 88.99. You you have a swing point that has been trying to hit. It got it today, 88.80. That was from 2010. There's 3 other swing points up here, and we'll see whether it's going to basically go after those. The highest one, without going all the way back to 2005, would be 89.71. And right now, we had hit the 89 number. Now, the correlation with the dollar going higher and gold not getting smoked, a few of the other commodities are down, no doubt. You get natural gas down 1.5%. Lean hogs are off 2%. Aluminum 2%. Sugar 0.9. But what you don't have is you don't have these metals getting hit. That's telling me that the dollar is topping out. That's how this is, and which would totally make sense. Meaning top out. You can have just a normal correction. Bottom line, though, that's the way this is set up right now. We go take a look at the bond market. You go take a look at the 10-year first. What we have with the 10-year. 10-year is trading. This is so wild because what's happened now, folks, is that all the future contracts are 2015. So you got to get used to putting a 5 after all of these, which is pretty wild. 2015 is coming at us. So 10-year, we're at 126.09 today. Light volume, extraordinary light volume, by the way. We're going into volume of 1.9 million contracts, and thus far the 10 years only done 1 million contracts. We take a look at the 30-year. What we have with the 30-year contract. 30-year contract right now is trading out at 141.09, and that has rejected lower price. And, the thing that's so cool about the 30-year, folks, is that the 30-year leads the 10. It did get to a lower low today, so if we even take that lower low, which is 140.26, volume there was 267,000. You're going into 685,000. Bottom line, 10-year, 30-year, bonds want higher price. Right now, the yield on the 10-year is 2.2. So you're still talking 30-year mortgages running out about 3.95, maybe 4%. Our phone number is 877-927-6648. Let's go take a look at the oil market. What we have with oil out here. Oil is trading flat. She's up 42 cents, but it's really flat. 67.30, and that's flat with light volume. So she's not pushing down. She's not pushing up. What is amazing, folks, is this. Check this out. Now, this price of oil that I'm just giving you, okay, that's basically crude oil, NYMEX crude, okay? This is what you have in the oil market in general. If you want to hear something that's really wild, is that in the Balkan Shield, bottom line, at the wellhead, oil is under $50. It's sub $50 in North Dakota as well as Colorado. So crude oil sold at the wellhead in the Balkan Shale region in North Dakota fell to $49.69, actually 3 days ago, according to the marketing arm of All America Pipeline LP. That's down 47% from this year's peak and 29% then, and 29% less than the $70.15 paid for Brent. The cheaper price of North Dakota crude underscores how geographic and logistical hurdles can amplify the stress that plunging future prices have put on the drillers in the new shale plays that have helped push U.S. oil production to the highest in 31 years. Bottom line is that oil's great, folks, okay? It's a big bathtub, no doubt. But what does happen is that you have to get it out of the wellhead and you have to get it to the wholesale and or retail clients. And I suspect what you're going to see at the bulk, and that's going to go down even further. Some of the high volume stocks we take a look at out here in this low volume market. We have Kinder Morgan's up 22 cents. Apple's up $1.23. We have GE up 37. Let's go over and we take a look at, check this out. This is just pretty amazing. Google. So what you have with Google is this. Google's, has a high volume low out here. We're at 531. Google wants to, run down to this 508. But one of the founders, it's not that they're pushing a lot of stock out in comparison to what they have, but they've sold 500,000 shares, 800,000 shares, I think. 800,000 shares in the last 2 weeks, which is 500,000 billion. We'll talk about that as soon as we come back. Stay right there, folks. Come right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. Prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Check out the new look of Tiger TV. Now you can see a host, charts, and computer screens crystal clear in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials up 27, Nasdaq's up 20, S&Ps are up 7.5. Let's go over to our man, Mr. Daryl Martin, as we do each and every Wednesday at 20 past the first hour. Daryl, folks, has an outstanding show right here at TFNN, broadcast every trading day, 1 to 2 Eastern Standard Time. And don't forget, folks, we start all live programming at TFNN, 8 o'clock in the morning to 6 in the afternoon. Get it all right on your cell phone, TFNN.mobi. You can also get Tiger TV. Just go to TFNN.com on your phone, hit the TV on the right-hand side. You're going to see, and you just heard that promotion, that we have a whole new digital high def deal going on. You can see the charts. It's absolutely extraordinary. Darryl Martin, what's going on?
How's it going, man? You have a good Thanksgiving?
I did, and yourself?
Wonderful. Yeah, fantastic.
It's a beautiful thing. And Darryl, folks, specializes in the Nadex platform. If you haven't test drove the Nadex exchange yet, you can come over to our website at TFNN. The banner's on the top, on the side. Hit that banner. You can bring up the exchange. They'll put $25. You can set up an account. They'll put $25,000 of paper money into it. You can see exactly how vibrant these different contracts are. And when I'm talking about contracts, you go from either 20-minute contracts, intraday, daily contracts, weekly contracts, and now they actually just put in a contract with the Bitcoins. That's pretty interesting, man. There's no doubt. Yeah.
They got the daily and weekly Bitcoins, and here in 2 weeks, they're going to be launching 5-minute binaries.
5-minute on the S&P? On the S&P?
On all the FX pairs from 6 o'clock at night running to 4 o'clock in the afternoon the next day.
That's a pretty cool thing, man. That's now
not all the FX pairs. Dollar, pound, dollar, euro,
the important ones. Okay, so and once you get the account up, folks, even if you're test driving it, Darryl has a great analyzer, and the analyzer is a must because what happens, folks, it's not going to tell you whether to go long or short, but what it does specifically tell you is this. Is that the strategy that you're picking out, you're going to know what the best contract is on a probability basis. Because what does happen, these markets, they're good markets, they're fast markets, and what does happen is that at certain points, you can have a contract that is expiring 2, 3, 4 hours later, and you're buying that or selling that at the same price. And that's crucial because time is the whole deal inside these contracts, no doubt.
Oh, definitely. And you can go in there, and I mean, they're bringing in so many choices, and it's one of those like great things because there's so many trading opportunities.
Yes.
But at the same time, it can bring you a lot of challenges because you can narrow your focus and miss out on what's really there because you don't want to click around everywhere.
No, and there's no doubt about that.
Like, you don't want to click, even if you're just trading 20-minute binaries.
Right.
I mean, you still got to click 4 times to see all 4 markets. So and then you have to hit refresh every 20 minutes, and
that's
the scanner's going to automatically pop those up. I mean, add the 5 minutes in there. It'll put those in. So it'll automatically refresh those every 5 minutes. I mean, imagine literally hitting refresh every 5 minutes, having to click between, all those different markets. And now this will it automatically just puts everything right in front of you. Makes it really simple. It does all the math for you, too. And, it does all, like, what's the risk, what's the reward, what's the risk-reward ratio, things like that.
Yeah. And what happens, folks, as Darryl was just saying, is that at certain hours, your 20 minutes are expiring, and then you could have the hourlies expiring on a couple hours. And so what ends up happening there is that you have a slew of contracts that you're looking at that you may or may not want. The difference with the analyzer is that it's totally set up and it's right there in front of you.
And you can go in and, it really is any system you want to trade. You pull up and you just find out. I mean, you gotta consider time.
Yes.
But you don't think it's like that can also be a big edge. A lot of people they're like, well, I don't want to have to stay in a trade all day long. Right?
Right.
I can't sit there for 8 hours. I mean, you can sit there for an hour, 30 minutes, 20 minutes, 10 minutes, and then they know the trade is going to expire at that point. Whether that be binaries, whether it be spreads. Spreads are a lot more trading than early markets. Usually need a little more time for movement, right?
Yeah.
On a spread, and which is great. I mean, you have low risk, big, movements, big profits, or you can go, hey, I just want to have, I just want to collect some premium, or I just want to have a great risk reward on a small move, things like that. They can find those contracts really simple and really just any trading schedule.
I can tell you this morning, as the market is basically, waking up, folks. I'm looking at the market, and the first expansion in the market as soon as it was opened, was in the S&Ps I'm talking about now, 9 o'clock, 9:20 rather. The S&P went from 2065 and just spiked to a 70. And I was thinking about the binaries, right? And I'm saying to myself, you know what? And this is, this is from a bear, of course, folks. As though there we go again. Just wait a few minutes. All you have to do is wait a few more minutes more, and there's going to be the spikes, and they're going to be up, of course. You know what I mean?
Oh, yeah, they're flying up. I mean, I had a buy-in at 2068. And target going up to 2070 and then on up again. Right where about the 2075 is my final target of my long for the day. So we're moving right into it.
Now, it's too bad that, and folks, so Darryl has a great show every trading day, 1 to 2. himself and I have a show at 10 o'clock Friday morning. And on Fridays, of course, the Fridays are always a great day trading gold. How about Monday in gold, right? That's sick.
No kidding. That was insane.
That was sick.
And we just had a lot of those just killer moves.
Yeah.
On like all the yen pairs.
Yes.
And killing it. We go in and look at, some of the other things basically pound yen, Aussie and Euro yen. You go in and look at gold oil. It's had obviously some insane drastic moves. You got gold flying.
Yes.
So, there's a lot of great trading opportunities which can scare a lot of people, But, that's really when you want to be trading. And if you're scared of it, it's usually because of, risk management, stuff like that. That's where you can, come in with these defined risk products and, trade with a little bit less hesitation.
And folks, when we talk defined risk products, it's extreme defined risk, okay? Whatever you're put up on the trade, that's all you can lose. But what's so cool is that you're actually leveraging quite a bit, and it has to do with because it's a smaller time frame. Many times, Daryl, I can't even picture what happened on Monday, whoever is on the other side of those gold contracts, because forget it, folks. That was a move that, well, I don't think any of us have seen in a couple of years. It was a $70 move, folks, from the bottom to the top. And
it was triple deviation move.
Yeah.
So basically, there's less than a couple % chance that move happens.
Yeah, isn't that
so
cool?
Massive. Yeah.
And hey, do me a favor, talk a little bit about the deviations too, because your deviations are a little bit different. They're not different, but they're more accurate, meaning time-wise, because how you're taking them off the market.
Yeah, what we do is we post up our deviation levels every day right around 8:30.
Yes.
So 8:30, 9 o'clock. Sometimes, because I have to go in, I have to double-check everything. But what we do on our deviation levels, I'll pull them up and show them if you're watching out. If you're watching online, if you're not, I'm bringing up a screen right now inside the scanner.
Yep.
And we post deviations for all the major U.S. indices, S&P, Russell, NASDAQ, Dow, oil, natural gas, all those, gold, and basically a deviation move. What we do is instead of using standard deviation, which is what most traders think of, they think of that standard bell curve.
Yes.
We're going in and we're using implied deviation.
Okay.
And implied is it's implied. It's expected, right?
Yes.
So it's an expected move. Well, where do we get that expected move? We can't get it from past movement because what is the classic, risk disclosure? Past performance is not indicative of future performance, right? So we use that implied movement from the options market, and we use that to let the market tell us how far the market's going to move every day. And like I said, they're insanely spot on.
Amazing. Listen, folks, don't forget, every day, 1 to 2 Eastern Standard Time right here. You can listen to them. You can test drive the Analyzer right here, right now. Darryl, you have a great night, safe night. We look forward to the show tomorrow.
You too.
Stay right there, folks. Come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials up 41, Nasdaq's up 24, S&Ps are up 9.5. We have gold up 11.40. And when we talk gold, folks, okay, if you come over to our website at TFNN, what you're going to see right in the carousel, this is hard to believe, actually, but time just flies. We are doing a special, I'm doing a special for the next 2 weeks, and this is what it is. The 660th edition of the Gold Report is coming up. That's 12.5 years. In the gold market, which is pretty wild. Bottom line is that you can get 60 editions of the gold report for only $600. You're saving about 50% off the normal price. What you also get is that we just did a second printing of The Art of Timing the Trade. You will, if you do the promotion, which is 60 issues for $600, you also get a signed copy of The Art of Timing the Trade. That's an $88 value. You get that absolutely free. If you have Tiger dollars, you can use Tiger dollars. If you're a subscriber now, you can basically save a good amount of money. So that we kicked that off today, and as I said, It's the 660th gold report. Pretty hard to believe because I remember doing the first one. And it's absolutely wild. There's no doubt about it. I do appreciate all the business and the growling and prowling out here for all those years also. Our phone number is 877-927-6648, and we do talk gold. Let's go over to the XAU. We take a look at the XAU. And what you're going to see in the XAU is this. XAU right now is at 73.34. Volume-wise, what we had is really sweet. And what it is this, is that on Monday, when the gold contract itself rejected lower price, goes up $70, the XAU had monster volume. So it's pushing a higher swing on volume. We did 51 million shares. Now, the 51 million is going against the downdraft of 45 million. That's what you need in order to get up into this higher trading range. The XAU right now is trying to get inside 75.39. Once you get inside that 75.39, then it has a shot to get up to this 104. What's going to be intriguing is this. It looks to me that we actually get a small ABC structure up on the XAU and the HUI. The correlation, or the confirmation rather, would be as you pass the B point in the XAU, that's 75.27, you're going to need more than 43 million shares traded. We go into the HUI, the Gold Bugs Index. Gold Bugs Index up 540 out here today. Gold Bugs Index also had the same correlation, monster volume coming into the swing point. We had 41 million shares on Monday as it was pushing higher versus your downdraft of 31 million. The B point on the HUI is 181.33 and would need 30 million shares. As you can see, that's not going to be that hard to get. Monday you did what, 41 million. That's a good amount of volume, but it's not that hard to get. So bottom line is that what you do have here, if we get this B point with volume, then you get action. Because see, what happens, folks, is this. The XAU and the HUI went down so fast from the August at 251 to 183 that when you go into that, there's not resistance on the way back up. That's how this shakes out. So it's going to be interesting watching this whole thing shake out. If you are in the metals market, your gold, silver market, and you want to take advantage of the special $660 for $600, come over to our website at TFNN. You'll get 60 issues for $600, which is a 50% savings. Plus, you'll get the Art of Time in the Trade. It'll be an autographed copy. And bottom line is that a great gift for the holidays. Okay, let's go to the XLE. The XLE, of course, is the Energy Select. That's up $1.10 out here today. This is doing another ABC structure on the way down. And this is going to be intriguing watching this play out. So the XLE, folks, has come down from a price point of $9,900. You're at 82. You have a high volume swing. That's October 15th. That's $77.51. We got down to 78.67. You're up today on 28 million shares. You were down on Monday with 51 million. Yesterday you did 33 million. Today you're going to do about 32, 33 million. That's a classic ABC structure on the way down. It's a big number too. So this is going to, we'll see how the volume is pushing into these lows. But what we also have is this: is that what's screaming for the XLE is the high of October 08 lows. That's $63.43. That's the way it's set up right now. If you get into that high, price-wise, then watch out. Then you're talking some real destruction out here. Yeah. If we go take a look at some of the drillers, the drillers are still in big trouble. They're all in trouble. But you take a look at rig, Transocean, that's come down from $45. It's trading at $19.65 right now. And the way this is set up, this wants to go not just lower, dramatically lower. You're talking about $10 here. There's actually nothing to stop it. Yeah, there's nothing stopping it. It's just snaking under $20. But once you're under this $20, the volume was monster last month. You're talking 289 million shares on the way down, and there's just nothing to stop it. And what does happen in the drillers, in particular, is that the leasing rates collapse dramatically, because then there's no cash. I mean, no one's going to be drilling, folks, when oil, well, let's put it this way. When oil is at where we are right now, it's not the end of the world. Oil goes lower, you have some problems. What does happen for the drillers, so there's a difference in the aspect of, let's say, the Exxon Mobils. They want to go lower, but guess what? Exxon's never going out of business. I mean, it's paying 2.9%. If you want to be in business for a long time, you know, these oil companies are great to have over the course of 5, 10, 15 years, whatever that is. Drillers, however, are different. And what the difference is that as long as they have enough cash, yes, they'll stay in business, but they don't get any business, and there's no new projects that goes on. That's how this shakes out. And that's a dramatic difference from the oil service industry versus these large integrated oils, meaning ExxonMobil, Chevron. Chevron's paying 3.77. You know, those companies are going to not only be thriving, they're going to take advantage of lower prices. And what you'll end up seeing in this downdraft, I expect, in the oil market, is many of the large integrated oil companies are going to come into these new shale projects, and they will scoop them up. Because what you had happen here is this, is that the shale projects themselves, the large integrated oil companies were not in there at the very beginning. You had small wildcatters in there that made billions and billions because they took the risk, they got it done. Some of them will still be there, but on a fundamental basis, the ones that are over their head, the large integrators will come in here now, and they'll know that, okay, now we're in, we got hold of it, and they'll have oil at the right price. We're going to take a look at Walmart. Walmart is the largest mover on the downside today in the Dow. Bottom line, you're pulling back with light volume. We're at 85. Yes, it can pull back to 83.06. What still hasn't broke inside that NASDAQ is the IBB. The IBB, the biotech index, hanging up there at highs, just like the market's hanging at highs. We'll see inside that if, in fact, that baby wants to go south. Gilead, which is the largest weighting, has come down off the 117 high. You're at $100 right now. It's almost into the swing point from October 15th. We're at 100 right now. The top of that swing point is 97. The bottom's 92. This looks like it's going to go after it. That's going to be a big heads up. Why? Because you have all these different high volume swings that are hanging out there, folks. And, you know, if you take a look at Gilead in general, it was a one-way move, $16 up to 119, 116 rather. Comes off 116, you trade it at 100. A normal retracement on this can take it down to 76, and of course, 76 is that's a big number. There's no two ways about it. As we've been talking here, the E-minis, the S&P, the E-minis, they continue to spike that higher, spike by spike by spike. First spike was actually as soon as I got on, right? Let's see. Yeah, your first spike, we went to 207.1. We're at 207.5 right now. What that was doing and is doing was testing that high of 2 days ago. So if we bring this up, I believe it just went over the high, right? Yeah, so let's see. The future, yeah, 207.5. Yeah, it broke the high of the 26th. That's 2075.26. Let's go look at Baidu.com for our man Mitch in Boston. Baidu.com, interesting. We'll bisect and dissect this as soon as we come back. This is Tom O'Brien. This is TFNN, 877-927-6648. Dow Industrials up 38. NASDAQ up 21. S&Ps are up 8. You have gold up $11. Silver's flat. Platinum's up 10. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now are up 38. And again, NASDAQ up 21. S&Ps are up 8.5. If we go back over to Google, so in Google, folks, okay, what you have is Google right now is down 289. And we take a look at it. What you have with Google is this, is that you have a high volume swing low out here at 508.53. So you do 530. My take is that, yeah, that's where it's going, number one, for a test. GOOGL. Let me bring this one up. So I'm going to bring this back a bit more. I think the GL I can bring back. Yeah, so the GL you can bring back, GOOGL. And what you have is that, so 508's the number. It wants to go test it at least. What you also have, though, is this. So check this out. This is, you know, it's not that this is a huge amount of shares compared to what he owns, but it is a good amount of shares. If we take a look, well, it's not just him also. There's quite a bit of selling that's going on right now inside Google. Insider selling, this is. If we take a look at, there she is. Come on, bring it up. There's latest changes. Sergey, where are you? So Sergey just sold 800,000 shares in the last 4 days. The GOO, that's interesting. So check this out. There it is. Okay. So he sold 100,000 yesterday, 103,000 yesterday. On the 18th, he sold 712,000. He owns 21 million. The key is, check this out, though. This is what's amazing. Just that 800,000, folks, is $500 million. So if you do, I just did this math out. It's pretty sick math. It really is. The bottom line is that you do 800,000 times 536. It's a heads up, though. That's the other side of it. It's a heads up. This thing wants to go lower. If we go away and we take a look at Baidu.com from Mitch inside the den, that's down 343 right now at 231, and no, I wouldn't be shot in that. This is why. So Baidu.com, nice sign of strength on the 25th of July. It gaps higher, goes to the day before was at 201, gaps up to 236. Has another nice sign of strength on the 30th of October. We go from 222 to 237, 10 million shares. All that's doing right now is coming back into that sign of strength with dramatically lighter volume. And that's on the daily. If we put this on the weekly, the same thing is set up. This is basically strong stock. And now let's go watch this. We'll go over to I was talking about this yesterday. Shanghai, folks, okay, we know all the news in, China on a continual basis seems like they're having trouble. Bottom line is that Shanghai has come off this bottom that it's had for a long period of time with strength. The Shanghai market, the high in the Shanghai was 6,100. That was in 2007. And we're only at 2,700. Shanghai never had the same type of market we had, meaning going up. Last 4 months, however, we just went from 2,000 to 2,700, and you have volume behind the move. So what that is saying is that, number one, and here, you're going to see this, Mitch, right now. This is pretty amazing, actually. The volume that came into there it is. The volume that came in last month is extraordinary, okay? In Shanghai. It was 569 billion. So that means that your swing point's going to get tested, which is another 3,400. So when you take a look at Baidu.com, we take a look at Shanghai, you put that together, it's like, you know what, there's definitely much better equities out there that you can basically short. And, a few of them are in that biotech index. The biotech index, folks, is just, let's CELG. Let me go look at Celgene for a second. Gilead's ready to go. Celgene, not really. BIIB. This is the largest one. The Biogen's up $18 today. So this is what's keeping the index up right now. Biogen, this is a wild one because this has been in a consolidation for a long period of time. Yeah, you don't want to go short. You don't want to go short this one. This one has strength also. This is going to. So Biogen's going to go test this high, the high out there of 358. It's been a consolidation for quite a bit, but yeah, that wants to go test that high. Let's go over to the financial XLF. So XLF out here going to another high. If we go take a look at JP Morgan, JPM first. JP. What do we have with JP Morgan? That's going after its highs. This is dying on the vine, though. So JP Morgan, okay, JP Morgan, high volume swing low on the 15th of October. 3 different highs up here, meaning spaced out. I suspect we're going to still hit 61.93, and we'll see whether we can take it out or not. Bottom line is that it's having a tough time. Berkshire Hathaway, BRK, that is the largest weighting structure inside the XLF, and that continues to be higher. That just went from 132 up to this 149 area. A normal pullback, or just a pullback in general, can get that to 142 in about a heartbeat. No doubt about that. You know, coming into the close out here, you had the E-minis. You had those 3 little spikes inside the E-minis. Right now we're 2074. And it's 207. This is going to be pretty wild because there's 207 3.25, which it was spiking the 27th. That's what we were just doing. You know, we'll see whether it can hold up into those numbers. If you hold up into those numbers, higher highs, of course, can go higher. We take a look at the SPY for that correlation. Inside that correlation, we have with the SPY, we have 57 million shares traded. It's at 208.02. And that 57 million is over the 142 million that was traded at that high. So that's pretty amazing watching that whole baby shake out. If it holds price, it holds price. That's the bottom line. And right now it is over that whole structure by a good 20 cents. Don't forget, folks, if you happen to be in the metals market, you want to be in the metals market, we have the 60 at 600. It's the 660th edition of the gold report that's coming up. We got a special that's going on that's basically half price. It's $10 a week. That's what it comes down to, $10 a week. What you get with that also is that we just got a new printing of The Art of Timing the Trade. You get an autographed copy of that book absolutely free. Check it out on the front page of TFNN. If you do have Tiger Dollars, you can do it with Tiger Dollars. You can do it with Tiger Dollars. If you're subscribing now, it's a great way to basically save money. Check it out on the front page of TFNN. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back with a couple earnings numbers coming out. Dow Industrials are up 30, NASDAQ up 19, S&P's up 7.5. We're going to be right back. Folks, this is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our quotes here, see what we come up with today. This is from Alberta Ferretti. I start with the idea that nothing is impossible and everything can be done in the end. You know, it's wild. When I pick these cards out, folks, and I have a lot of these cards, and it seems like the same ones always get picked out. That's a beautiful thing, though. Market-wise, let's take a look at it out here. Dow Industrials up 33, NASDAQ up 18, S&P's up 6.5, gold contract up $10.60, traded at $1,210 an ounce. Silver flat at $16.41 an ounce. Now, what's so cool here, folks, is this. Check this out. So, gold on Monday, rejected lower price. Not only goes higher, it goes higher with monster conviction. You know, the gold contract went from a price point of $11.41 up to $12.22. So bottom line is that you go up $80. Monster volume, okay? Today, you're up $10. Now, $10 is not a lot. But what you have, folks, is that the dollar index is at highs. With the dollar index, and we'll growl and prowl and bisect and dissect that in the next few minutes. But what you have, and here's some divergence. You have the dollar index at highs. It's testing the 2010 highs. did not go back. What that's telling me is that the dollar, after 7 months of moving higher, bottom line, is basically topping out, do some kind of retracement. Bottom line, is not affecting the gold or silver market right now, which is pretty intense. Gold right now, you're 1209, wants to run up to this 1256 level. The XAU and the HUI look like they're in small ABC structures on the way up. So it's really going to get intriguing watching this whole thing shake out. Platinum up $10, trading out at $1,226. You get copper at $2.89. Oil's up 46 cents at $67.34 a barrel. Oil's having a hard time getting any traction at all. Yesterday it looked like it wanted to do a little bounce. Today it's a sideways move and it has light volume. So I do expect you're going to see some kind of a bounce out here. Bonds. The bond market continues to want higher price. What we had out here with bonds today is that the 10-year is flat, 126.09. It's yielding 2.2. So that's saying that the 30-year mortgage is 3.9, 3.95, maybe 4. The 30-year Treasury is saying, once again, it not only wants to go to the 148 mark, and it's trading at 141.10. It's up 7 ticks. The 30-year has been basically leading the whole charge to higher price. King dollar. Now, let's go over the King dollar, because this is pretty wild. DXH. So we're dealing right now with all the contracts in the futures market. We're dealing with 2015. The dollar index closed at 89.26. That's at its highs. What it has done and what it has been trying to do for a full month is hit the 88.80 level. Now, we got over that level, and what that sets up, which is going to be wild watching this whole thing shake out, so your swing point was 88.80 in June of 2010. You have three other, the higher swing is 89.71. And it looks like, guess what? That wants to get spiked, and then we'll see whether it's going to make it to 92. This whole area in here, these little swings want to get hit. The divergence, however, has to do with the metals market, and this is telling me that this is the end of a dollar move right here higher. The real key. Now watch how this plays out. So the dollar index itself, when we go from highs to lows in the dollar, when I started the gold report, the dollar was at 121, and that was 11 and a half years ago. 12 and a half years ago. 12 and a half years ago. Bottom line, dollar gets down, does a low, gets a low, it's $70. Okay? 121 to 70. If you remember, that was John Snow, was our Treasury Secretary, and he continued to say that he wanted a strong dollar. You talk about future speak. That was the weirdest thing in the world. Every time he said he wanted a strong dollar, dollar was going down. Bottom line is that no one really talks about the dollar much anymore, meaning that I think most folks realize that the dollar is king dollar. Why? Because the rest of the currencies across the world are terrible. But bottom line is that it's king dollar. So, in the context of does it want to go back to 121, the key is this. If and when we break this consolidation that the dollar has been in since 2005, the price target, no doubt, is 121. Can't break them down, you're going to break them up. I suspect that's not going to happen at this point. It's going to happen at some point, because when I look at the whole rest of the world, the dollar is the name of the game. But the reason I don't expect it right now is this, is that when you do a straight line move, the amount of energy that it takes to go from 77 to 87 to 89 is extraordinary. So when you're bullish on any equity or currency or commodity, what you like to see is you want to see it stop before the swing, pull back, build cause, and then blow the swing away. We're not doing that. What we're doing, and this is where you can see that it's taken a month. See, it took a month for the dollar to only do about 400 or 500 ticks to test this out here today. So that's telling me that this is the test. This is what it wants to do. Then you'll back off, and we will get a lot more information off the market when it does back off. Because if it backs off and comes off the high with volume, that's saying a larger correction. It backs off with light volume. What that sets up, it's going to make a run, and it's building cause for higher price. Right now, though, divergence in the spades. And that divergence, by the way, folks, has to do with our own S&P also. The broad market has also loved the strong dollar. So this move on the dollar today basically did not have the S&P behind it. If we go over to the S&P right now, we start with the cash. What you're going to see, you're at a high. Cash S&P today up 816. We're at 2074, and the high is 2075.76. That's going to get hit. It hit the high of today was 2076. The correlation inside the SPY, volume-wise, we did 64 million shares versus 142 million. That's not even close. That's a test of the high and dramatically lighter volume. The NASDAQ composite, what we have with the composite goes up 18 bucks today. That didn't make the high of Monday's down day. Almost made it. We went to 4781. 4782 is the number. The Russell 2000, we take a look at the Russell. Russell today is trading out at, was up $11 at 1179. And the high out there, the last high is 1191. The high in the Russell, the actual high, is 1213. The Russell continues to be the weakest index out there. Silver, let's go over to the silver market. We take a look at silver. What we have with silver is this. It was a flat market out here in silver today. We're at 1642, and silver also had rejected lower price in a dramatic way. Silver's volatile, man, but that was about as intense as you can get. Silver is basically at 1640, and the next move is going to be the 1780. And if you get the 1780 move, and it moves with conviction, you're going to see silver at 2150 in a heartbeat. It's pretty amazing. On the way down, they can kill silver. On the way up, they take no prisoners. It just goes. I mean, it was a $2.50 move there on Monday. The bonds, as we said in the bond market, bonds want higher price. That's the bottom line. Some of the high-volume stocks in this low-volume market out here, we had Apple up $1.30 today. Micron Tech was up 49 cents. We had Microsoft down 38. Gilead Science was off 131. Some of the Dows, some of the stocks inside the Dow, Marbell was down 29. American Express was off 175. Not sure what hit American Express, but American Express does want lower price, folks. American Express came down 5.9 million shares. It had tested its swing point yesterday. The test yesterday was 3.1 million versus 6 million, and just gave it up. It gave it up, by the way, with volume. Where same seller that was out here all of July just hit the stock again. In July, it had come down with 5 million shares, with 2 million shares, and today it at 5.9. They're unloading American Express. Get out of the way. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow finished up 33. NASDAQ up 18. S&P's up 6.5. We're going to be right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see a host, charts, and computer screens crystal clear in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished up 33. Nasdaq up 18. S&P's up 6.5. AVGO. Let's take a look at AVGO. This is a technology company that manufactures semiconductor products, radio frequency, microwave components. The low for the year is 44. The high is today $95. Just come out with numbers. This is trading at $100, I believe. Yeah, $100. It's up to another $5. And numbers go like this. Whoops. So the estimate was $1.70. They made $1.99. Revenue is $1.61 billion. They beat by 31 cents. So it's a big beat. There's no two ways about that. We take a look at this. This has been a straight line move for quite a while. We've put this on a 10-year basis, and it's pretty amazing, actually. This went from $31 up to 90. And you have volume all the way up to 72. So bottom line is that after the close, this is up $5 right now. We take a look at the, where is she? There it is right here. $2 gasoline. I know we just hit under $2 gasoline. Here it is right here. Check this out, folks. $2 gasoline is back in the U.S. An express station in Oklahoma City was selling fuel for $1.99 today, and that became the first one to drop below $2 since July 30th of 2010. Said Patrick DeHaan, the senior petroleum analyst at Gas Buddy organization, said in an email from Chicago. We knew when we saw oil prices, crude oil, dropped last week that would break the $2 threshold pretty soon, but we just didn't know when. It's pretty intense. Now, if we bring up gasoline, if you want to see something that's really wild, folks, okay, it's below $2, but it's going to go lower than this. So let's get gasoline. Okay, so wholesale gas right now is $1.80. That's wholesale unleaded. If we take a look at this and see where we're at here. So your A point on this was $2.45. Your B, let's take the B. So it's a 40-cent A to B, which gives you where we are right now. So that's one ABC structure that finished, and finished, right to the T. The next one, conservatively, the next one would be $2.15. So it's a 20-cent ABC, and you're there also. Okay, now we're going to do the large one. So you have multiple ABC structures that have hit. The larger one would go like this. The larger one would go from $2.45 to $1.96, so you get 49 cents, and that would set you up a 159, and that's where I suspect we're going to get, which is going to be wild. So a 159 versus a 180 is going to get you pretty much across the whole country $2 gasoline, which is just absolutely amazing. There's no doubt about that. Because the amount of savings that we all get from this gas is absolutely huge. I mean, every tank seems to be like $25. Big numbers. We go and we take a look at the small caps. Let's go to the IWM. We take a look at the IWM. Come on, baby, this she is. Okay, so IWM out here, Russell 2000, we use the iShare. IWM did 26 million shares today. That's going into 36 million. We are at 117.37, and we'll see whether that the low of the high is going to get tested. The low of the high in the IWM is 117.53. We hit 117.71 today. We'll see whether that the low of the high actually wants to get hit. One of the Tigers want to look at RGLD. So if we look at, this is Royal Gold, folks. Royal Gold is a great company. Their business model is predicated on basically they bankroll many of these gold miners. There's only 20 employees, which is just amazing. And on 20 employees, okay, check this out, they take in $70 million a quarter. They're going to take in $70 million this quarter. And when you're looking at, if you're trying to bisect and dissect the Royal Gold in general, what you have to do is this. So watch how this royalty, different royalties, no doubt, are different. Meaning, what is the percentage they're getting out of it? The cool thing about a royalty company is that the percentages that Royal Gold gets, that Franco-Nevada gets, it's a top-line royalty, meaning it's the price of gold, and it's coming right off the top. It's not coming off of how much money the company makes as a profit. It comes right off the top, and when you come off the top, folks, that's about as good as you get. The way that Royal Gold is set up right now, so we take a look at this, because Royal Gold is a good indication of, number one, where the market wants to go, meaning the metals market. And what you have is this, and this is a big deal, and Franco-Nevada did this also. The downdraft getting into the lower range was in October 28th and 29th. The price-wise there was $65. It went from $65 all the way down to $55. Franco-Nevada and Royal Gold already made a buy that. That's telling me, so we're already up above that, and we did it with volume, by the way, okay? You charged into that with 1.4 million shares versus 1.1 on the way down. You went higher, and then all of a sudden last Monday had the surge again. Both of those equities are saying they want to go to the highs that were generated August 14th. And what's so cool about that is that when you actually take a look at the price of gold and that level, you're talking about a 350 gold, 1350 gold. And right now we're at 1210. So it's a big number. Now, the gold contract itself first has to take out the swing point of 1256. But the way that Franco-Nevada and we can pull up Franco-Nevada, FNV. And the way that Franco-Nevada is also set up, Franco-Nevada is at $53 right now. That downdraft was created at $50 down to $45. Franco-Nevada also had the juice on the way up. It had come down with 1 million shares. It goes up with 1.2 million shares, 1.1 million shares, 1.5 million shares, and then on Monday it did 1.7 million. So both of those that are a great gauge as to the physical price of gold are saying that gold is going higher. And when we do talk gold, folks, we have a special that's going on right now on the front page of TFNN. This is time. You talk about time flying. You can get 60 weeks of the gold report for $600. That's half price. You also get, we have the Art of Time in the Trade. We just got a new printing in. That's an $88 value. You get that absolutely free if you order the 60 weeks for $600. And where that's coming from, where this promotion is, folks, this promotion is that I'm coming up to the 660th edition of the Gold Report. That's 12 and a half years. And time flies, man. It blows my mind. You know what blows my mind? And I was saying to my son earlier when we were putting this together, can you imagine 12 and a half years from now? I remember this so well because I remember the first day I was writing it. It was that in the summer of 2001, I'm in Florida. It was like 100 degrees here, and gold is at $282.50. You gotta love it. $282.50. Pretty amazing. You stay right there, folks. We'll come right back. And if you do want to take advantage of that, folks, this is a one-time deal. It's only going to be up here for 2 weeks. If you have Tiger Dolls, take advantage of it. If you subscribe, take advantage of it. It's 60 weeks for $600. It's $10 a week. Plus, you get the Art of Time in the Trade at an $88 value. You stay right there, folks. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Caterpillar was up 67 cents. You had Oxy up 241. Walmart was down 98. Big Blue was up $1.85. Honeywell 211. Let's go to John in New York. Hey, John, what's going on?
Hey, Tom. Thanks for taking my call.
Sure. Thanks for calling. Thanks for holding, man. So,
UGAZ. It got clobbered the last 5 sessions.
Yeah. So,
do you think it's done going down?
Are you looking to get into this thing?
I'm in it, and I can go into margin to get some more.
No, you don't want to be in this. Okay, so let's go. Let's take a look at this. Okay, so if we go over to the natural gas contract, the contract itself is at 379. You're into the lowest swing point, and that swing point is 370 and 379 right now. It's going to go test it. The bottom line is it can blow it away. So it's going to go test it. If we go to UGAZ and we take a look at this, it is under it. Well, first off, the UGAZ, folks, is the 300% long position exchange-traded note. Now, these vehicles are basically daily investment vehicles. I know if you've been in it, would you get in it a few days ago?
Yeah.
Okay. So what you have is this, is that, when it went south on the 1st, you had expansion of volume. That's saying, okay, man, that's a big expansion of volume, no doubt. So that's set up. If you take the swing point of 1263 and then take the top of it, that's 17. That's $5. That's a good gauge. So what's that? 850? 5? Yeah, it's 890. That's your first price point. You're at 990. And you closed under the swing point of 1002. So this thing can go lower, man. I wouldn't be hanging around. You can always, the way gas trades, gas is volatile in a huge way, and this is 3 times the deal inside it.
But the winter's just around the corner, you know.
You know, there's no doubt that winter's just around the corner, but winter being around the corner has nothing to do with UGAZ. I know it's the natural gas ETN, and it should have to do with it, but you got to keep your money management in place. You know what's intriguing here, John and folks, is that the natural gas market, right, if you don't know this already, I've seen that Boone Pickens, okay, who has a great reputation. Everyone that knows of Boone Pickens right now, you know, folks, that he has billions of dollars. He's right on energy. He knows energy upside down, and he absolutely does, okay? Boone Pickens almost went bankrupt on natural gas, staying long natural gas. And if I learned anything, and this is really before I was actually in the business. I was in the discount airline business at that point, but I was down in Texas a lot. And I was always intrigued with this guy. And I'm going back to 1980, folks. But I remember that I was watching some of his interviews. He said, no, natural gas is going to go up. It's going to go up. And he lost billions. And he made it back. My point is that you can't hang in to natural gas just because it's winter. You know?
Okay, thanks.
Okay, man. Have a great one. Have a safe one. I'd love to say something different, but the bottom line, folks, is that what also happens is this. This is what you want to wrap your head around. When I was in Boston, so watch what ends up happening. The difference between gas, folks, now I'm talking a fundamental difference right now in heating. The difference in gas and oil, at least years ago, and maybe still, is that gas is cleaner, okay? And I remember the commercials in Boston when I was up there, because I've had units, meaning apartments, that had oil tanks versus gas heaters, you know, baseboard heating, which is gas, okay? It would be gas, it pushed through hot water. The gas companies, when oil was at a good price, meaning high, would push that, number one, gas is less expensive, which it is, and number two, it's cleaner. What you're going to have this winter, even no matter how cold this winter is you have the price of, let's go over and take a look at the price of diesel right now. So the price of diesel, heating oil, where are you? Heating oil, crude oil. Why don't I have this heating oil up here? Crude oil, gasoline. Well, the bottom line is that, even if I take the, I don't have this in front of me, but if you take the heating oil, I believe I don't have heating oil right here. Okay, so if we take the heating oil may run about $1.90 right now, okay? Bottom line, that also wants to go lower. So the competitiveness of the gas market versus the oil market, with oil going down so dramatically, that you're not going to get as many new customers, you know. And what gas is great, folks, don't get me wrong, but what gas's problem is the delivery. We have so much gas, number one, it's the delivery of that product to the customer. You know, in the last, if you want to see something that's absolutely wild, if you go over to if we all lived in North Dakota right now, they're selling oil at the wellhead in North Dakota. This is a story that is right now at $49.69 a barrel. So for all you young and old entrepreneurs out there, if you can figure out how to get oil from North Dakota to just about anywhere else in the country for less than, here, so let's do this number. So you get $49.60 versus, so what's that spread? The spread is $49, $59, $69. You get an $18 spread. If you can figure out how to get that oil into a refinery for less than, let's say it's an $18 spread, for less than like $14, you'd be a billionaire, or you'd be a multimillionaire overnight. Because there's so much oil at the wellhead, And what has happened right now, because oil went down so dramatically, they can't sell the oil at the wellhead. There was a CNBC today. They had the Business Roundtable out of Washington, D.C., and what was interesting is that Boone Pickens was on. He said he thought oil was going to go back to $100. The CEO of ExxonMobil was on, and he was saying that oil is going to be cheap for a very long period of time, Rex Tillerson. And this is why. His correlation was that right now, coming out of the United States, we have coming on within the next 4 to 5 months, there'll be an additional 1.4 million barrels that's coming out of the ground. Right now, we already are in a surplus, and what he was talking about is that we're talking about 1.4 million barrels a day, folks. Not a week, a day. That's how much oil we have. So that oil is going to be coming out of the ground. What he said would happen first is this. He said the pipelines would get filled up, the tankers would get filled up. If you remember, I remember when oil crashed, folks, I remember in 2007, 2008, Morgan Stanley is big time into oil. And all the bigger banks were big time into oil. And what they did is that they hired oil tankers to fill up the oil, put them in the Gulf of Mexico, keep them there until the price of oil went up. I actually saw 2 of them when I was out fishing about 35 miles out. And it was so weird. In the middle of nowhere, folks, okay, you get these huge oil tankers just laying there. And, of course, what ends up happening when you're fishing, that's a structure. You want to go right next to it. And we went right next to it. And, of course, the water there was so blue. It was amazing. And bottom line, there was a lot of fish. But that business aspect of it, what that was is that they fill up the tankers, let them lay there. You take the cost of the tanker, cost of the oil. No, there's no rent. There's no rent in the middle of the Gulf of Mexico. And if you haven't, it's not like laying a big ship in the Atlantic or the Pacific. The Gulf of Mexico most times is not rough, okay? In a big tanker, it's cool. So that being said and done, what Rex Tillerson was saying, once those are all full, guess what? The only place that oil can go is down on price, so people will use more of it. Now, as I'm walking through that, I love that. As I'm just walking you guys and ladies and tigers through that, I'm realizing that, you know what? The time to do is to go over to these shippers for a second. Maybe you can put something together and buy some ships. So if we go over to dry ships, check this out. Okay, so if we go to dry ships, this could get interesting because you know what? I have to do some research on this. We have to find out the shippers, the dry shippers, folks, have got killed. And there's shipping capacity out there, and the real key with shipping capacity, of course, is that how cheap is it? What is the daily rate? And that's gonna probably happen again. There's gonna be a business out there again of filling those tankers up and bringing them down to the Gulf of Mexico. Get a fishing rod. Get ships for sale. Yeah, ships for sale. Let's go, Terry. Let's go, brother. You stay right there, folks. This is Tom O'Brien. TFNN. We'll come right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? Put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials finished up 33. NASDAQ up 18. S&P's up 6.5. Gold is out there at $12.09. And, folks, we launched today on our website at TFNN. Right on the front page in the carousel, you're going to see 60 for $600. And what that's all about, you can get 60 weeks of the gold report for only $600. We're celebrating. I'm doing the 660th edition of the gold report, folks. 12 and a half years. Bottom line, that's half price. If you want to take advantage of that, what you also get, this is going to be for the next 2 weeks, and then it's shut down. The Art of Time in the Trade. We just got a second printing in. That's an $88 value. If you have Tiger dollars, great savings. You can use your Tiger dollars for the 60 weeks for $600. if you're a subscriber right now or you're a new subscriber, you want to be in the metals market for the next 60 weeks, check it out on the front page of TFNN. Let's go to Richard in Tampa, Florida. Hey, Richard, what's going on?
I'm doing fine, sir. I was just looking at the Australian dollar. Does this look like it's getting a little tired on the way down, or is it, if the U.S. dollar decides to make a pullback, will this make a spike as well up, just because it's been going down with the euro almost day for day?
Yeah, it is pretty intense. So let's take a look at it. You got the Australian dollar. The Australian dollar right now is trading at 0.84 to $1. If we take a look at this and we bring this back, what you're going to see, folks, is that this Australian dollar is down from $1.04. And the thing that's pretty cool, I'll tell you, we have the Tiger Real Estate Opportunity Fund, and we actually have an Australian tiger in it. And it was amazing because when he was investing in it, he was investing because he thought real estate was coming back in the United States, but he also felt that the U.S. dollar was going up and the Australian dollar was going down. So it's really cool because in his case, he is making money both ways on the currency, because the currency has gone down in relation to the dollar, of course, and it's down 20%. So, okay, let's see what we got here. So if we take... Now, are we talking short-term here or long-term, Richard?
Short-term, because, just a counter-trend bounce looks like it would bring it... it's dropped, 300 points in the last week?
Oh, yeah, no, it's a monster. Let me just see something, though. So if I go from $1 to 86 cents, so it's $1.05 to 86, 96.106. That's 20 cents.
It made a
Gets you 75. No, I wouldn't bite yet. Don't bite yet. No. This is amazing. It's a 75 cents. You're at 84.
Mm-hmm.
And this is what gets cool, though. So watch what happens here. At 75 cents, then you've completed a much larger A to B equals C to D that has basically taken almost 2 years. And now this is cool. I'm really glad you're calling here, because I'm going to go over to the dollar for a second, because what I think you have happening here, folks, is that the correlation is direct. The U.S. dollar has been so strong. And if we get into this correlation, it took a month for the dollar just to hit the 88.80. So the dollar's getting tired. The way that, looking at that Aussie, I'm saying to myself, well, maybe the dollar goes to 92. It could. 92 is your largest one. The bottom line is that, no, I wouldn't play that counter-trend bounce just yet. The way that you can play the counter-trend bounce, this is what you should be doing. The dollar index itself has volume in it. The currency trades, folks, currency, no matter where you're trading, does not have volume behind the move. In the futures market, the dollar index has volume. And what does happen, the volume is pretty good inside the context, meaning that what you'd be waiting for is that you'd be waiting for the first pullback in the dollar, and what you want to know is that it's a pulling back with volume or heavy volume. If you got a pullback and the volume was kind of heavy, Richard, off the high, then you can begin. Because then our dollar is going to have a counter-trend bounce, meaning pull back. The other currencies are going to have a bounce finally. Because there's no doubt, as Richard just said, the euro has got killed, the Aussie has got killed, the yen has got killed, and it looks to me that it's just not ready yet.
My question about the Aussie is, I noticed that when Australian market opens, say around 7 o'clock our time, when their reports hit, the dollar hadn't even moved, and the Aussie dropped 50 points in 5 minutes, literally. And then when the dollar did its entire thing today, which new highs, the Aussie actually went up at the same time. It was basically off that bounce.
That's right.
That just confuses me.
No, and what it has to do with, and there's no doubt, so it has to do, on a fundamental basis, it has to do with the aspect that commodities are down and commodity currencies have got killed. That's the essence. So the news that comes out, commodity-wise, is that they're not making the amount of money that they thought they were making, or they're not exporting because the prices are so down so dramatically, okay? So if we go, I'll show you the same correlation, even though Canada is on the same time frame as us. If we take the Canadian dollar, you're going to see the exact same type of deal. And it has to do, because you got to remember something, currencies themselves are fundamental moves. Like the Canadian dollar has just gone from $1 to $1.13, you know, meaning that it keeps getting weaker and weaker and weaker. I think you're close, meaning that, but I'd still wait. I'd wait for a longer period of time because what you're going to see, the first move, my take right now is that this move in the gold market on Monday was the first really sweet move because you had fast price destruction Sunday night. They couldn't break the swing point. Gold takes off topside $80. The dollar index today is still at highs. Gold doesn't get hit. So I suspect what we have, gold's moving higher, silver's moving higher, and it will probably take 3, 4, 5 more months before the rest of the base metals start moving. Because Australia needs base metals to move. They need iron ore to move. And in fact, if we go over to Valley, let me go look at Valley for a second. Valley hasn't bottomed yet. Valley's at 853 and just hasn't bottomed yet, man. That's going lower, you know. So,
one quick question, if you don't mind. On the S&P, on the ES Mini, should we wait for the thing to go back up and test its high from today and fail from that before thinking about even taking a short position?
Yeah. Even though, and what you did have on the S&P, I'm glad you brought this up, Richard. So what happened in the S&P, folks, by the way, is the last 5 minutes, someone hit this big. They sold 71,000 contracts. That's more in 10 minutes than it was all day.
That's all right.
Have a great one, man. Have a safe one. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking it right here tomorrow. Wow! Look at him, folks.